The Molecular Guardian of Global Trade, a comprehensive guide to SMX, security matters. As of January 21, 2026, SMX, Security Matters, PLC, ticker SMX, is one of the most polarizing and high-stakes stocks in the technology sector. It operates at the cutting edge of the physical-to-digital revolution, attempting to solve a trillion-dollar problem: how to prove that a physical material, like gold, plastic, or cotton, is exactly what the supplier claims it is. For an investor in early 2026, SMX is a binary play. If their molecular marker technology becomes the global standard for supply chain transparency, the company could be a generational winner. However, if they fail to translate their high-profile pilots into consistent revenue, the stock remains a high-risk speculative asset. This 1,500-word guide explores the company's technology, its 2026 strategic pivot into digital assets, and the weak financial health that every investor must acknowledge. 1. The core technology, molecular identity. SMX does not rely on barcodes, QR codes, or RFID tags, all of which can be removed, forged, or destroyed. Instead, SMX marks the material itself. How it works. The marker. SMX uses submolecular particles, invisible chemical markers, that are embedded directly into a raw material, like liquid plastic, molten gold, or raw cotton fibers. The memory. These markers are persistent. They survive melting, refining, and manufacturing. If you embed the marker in raw rubber, it is still detectable in the final tire. The reader. SMX provides proprietary readers that scan the material and instantly identify its origin, age, and ethical certifications. The blockchain. The data from the reader is uploaded to a blockchain-backed digital product passport, DPP, creating an unchangeable record of the material's lifecycle. 2. The 2026 catalyst, the gold and silver reckoning. In January 2026, the primary narrative for SMX shifted towards precious metals. The global gold market has long functioned on trust, relying on refinery stamps and paper certificates that are increasingly susceptible to fraud. The proof-first infrastructure, verifiable bullion. SMX is currently working with major vault operators and refiners, including a significant partnership with the Dubai Multi-Commodity Center, to create verifiable gold. The economic weight. In early 2026, the market is beginning to price a certainty premium. Verified bullion is trading at a slight premium because it minimizes the risk of seizure, compliance issues, or rejection by central banks. Silver expansion. Following the success of gold pilots in 2025, SMX announced on January 15, 2026, that it is extending its identity platform to the silver and industrial denim markets, aiming to provide a durable memory for materials used in luxury fashion and high-tech electronics. 3. The digital transition, the Kraken and PCT strategy. A major development for SMX investors in 2026 is the company's move into digital asset treasury management. On January 16, 2026, SMX announced it had opened a corporate account with the Kraken exchange. The Plastic Cycle Token, PCT. This is not a general-purpose cryptocurrency. Instead, the PCT is a virtual credit designed to represent verified recycled activity. Measured outcomes. While other green credits are based on estimates, the PCT is tied to physical materials that have been marked and read by SMX technology. Institutional rails. By opening an institutional account with Kraken, SMX is building the infrastructure to allow companies to trade these tokens as a new form of digital value. This move aims to make circular economy performance an auditable, liquid asset on a corporate balance sheet. 4. Financial health, the weak reality check. While the technology narrative is compelling, the financial data for SMX in early 2026 remains a major warning sign for conservative investors. Key financial metrics. As of January 21, 2026, stock price, around $21.40, down significantly from historic peaks, but seeing extreme intraday volatility. Market capitalization, around $215 million. Profitability. The company is not yet profitable. In its latest reports, it showed a net loss of over $44 million for the trailing 12 months. Liquidity crisis. SMX operates with a current ratio of 0.08, meaning it has very little short-term cash to cover its immediate bills. Dilution history. To fund its operations, SMX has frequently turned to the capital markets, including a recent full conversion of $20.6 million in convertible notes into new shares. While this eliminated long-term debt, it also diluted the ownership of existing shareholders. 5. Critical risks. The anti-SMX case. 1. The zero revenue hurdle. The central risk is that SMX is still a proof-of-concept story. Despite dozens of pilots and partnerships, they have yet to show the massive recurring commercial contracts required to justify their $200 million plus valuation. 2. Extreme volatility. SMX is a high-risk stock. On January 5, 2026, the stock dropped over 15% in a single day. It has a negative beta, negative 2.92,
meaning it often moves sharply against the broader market trends, which can be disorienting for new investors. 3. NASDAQ listing compliance. Due to its low share price and volatility, SMX has historically struggled to maintain the minimum requirements for its NASDAQ listing. Any threat of delisting would significantly hurt the stock's liquidity and credibility. 4. Adoption resistance. Supply chains are slow to change. Convincing global refiners or plastic manufacturers to change their production lines to include chemical markers is a monumental task that faces stiff competition from cheaper, though less secure, digital-only solutions. 5. Investor strategy. How to approach SMX. The lottery ticket lens. Do not put money into SMX that you cannot afford to lose. Treat it as a high-beta speculative play on the future of ESG, environmental, social, and governance regulations. Watch the revenue recognition. In 2026, the most important news won't be another partnership announcement, but a quarterly earnings report that shows actual cash coming in from technology licensing. The regulatory catalyst. SMX is a bet on government regulation. As more countries, like the EU, mandate digital product passports, the demand for SMX's molecular-level proof will increase. Conclusion. Beyond speculation, SMX in 2026 is a company trying to bridge the gap between technical truth and financial value. They have successfully proven that their markers can survive the world's harshest industrial processes. Now they must prove that they can build a sustainable, profitable business around that truth. The verdict. If you believe that the era of trust-based trade is over and the era of evidence-based trade has begun, SMX is the most pure-play investment in that transition. However, you must be prepared for a weak financial profile and the high likelihood of further share dilution as they scale.